have today a very great group of speakers with us. First of all, Pedro de Garay, CEO of GBM Mexico. Welcome, Pedro.
Thank you.
We have Susan Greenwell, Senior Vice President and Head of Global Government Relations at MetLife. Hello, Susan.
Hi.
Piwowar, Executive Vice President of Finance at the Milken Institute. And we have finally Regina Reyes-Heroles, Personal Finance author and journalist, and me, Moris Dieck, author, business consultant, and a passionate spokesman of financial inclusion and financial education. Welcome, everyone. I would like to start the session with a very simple question, but I think we can start from there. I want to hear from everyone your overview of the financial inclusion situation in the North American region, and if you can give me one challenge that should be prioritized and should be top person. I don't know who wants to start.
Start? Yeah,
Great.
To frame the question, right? So thank you all for being here. So as you mentioned, my name is Mike Piwowar. I'm the Executive Vice President at the Milken Institute. I'm also very proud to be a fellow of the North Capital Forum, and as part of our duties as fellows, we have to write papers on various issues. And one of the things I chose to talk about was the fact that North America, combined the three countries, we're an economic powerhouse that punches above our weight. And I like to use the analogy of my favorite boxer, Julio Cesar Chavez, who punched above his weight in this. At a macro level, we have only 7% of the world's population, but we contribute to 28% of the GDP of the world at the macro level. Now, drilling down into the micro level, that's where democratization of capital and financial inclusion comes in. In the United States, we have a phrase that we like to use talking about the American dream. And that dream is to, have a meaningful life, have the opportunity to flourish, have the opportunity to give a better life to your children. And it's not just unique to the United States of America, it's actually very common across North America. And I think this issue that we're talking about today is an integral part of the American dream, or the North American dream, for the purposes of this conference. If you think about it, we've got some individuals, their dream is to take their entrepreneurial spirit, take a risk and start a company, hire workers, bring on investors, and bring a product and service to market, thereby improving the standards of living for the customers that buy their products, the workers that have meaningful jobs with them, and the investors who come along and earn returns on their investments. For other people, the North American dream is to take their hard-earned savings and to invest in those entrepreneurs, and to take the results of those investments and save for their retirement, save for their children's education, and then take some of those proceeds and reinvest into their communities, either philanthropically or into other entrepreneurs. And so the issues of financial inclusion, the ability to invest in entrepreneurs, and access to capital for those businesses are really what allows people to invest in the American dream, the North American dream, by investing in each other. Now, to your question about what are the biggest challenges, I think the biggest challenge that we try to fix at the Milken Institute is how do we make the financial system work for everyone? We can talk about averages and we get some of the stuff, but we know there's disparities, whether it's across genders, races, other types of things that we're working to fix.
Great. Thank you, Mike. Who wants to go next? Susan?
Sure. Maybe building on Mike's, landscape setting, which I think was really helpful. You asked about challenges, and I think, one of the things that MetLife has been focused on, both through our business and how we meet customers where they are, as well as what we're doing to enhance financial inclusion and financial health through investing in organizations that are running programs that are broadening inclusion, is that, we often think the solution to financial inclusion is information. If we give people education and information about financial health, that information alone will be enough for them to take action to improve their own financial well-being. And we have seen study after study demonstrate that literacy, financial literacy or financial education alone is not enough. And so the challenge is, how do you get people to act in their own best interest and participate and take action on the information that they're being given? And so we've been very happy to partner with organizations that are using behavioral science to determine how best to incentivize people to act on the information they're given and improve their own financial well-being. And so that's a challenge that I think is common not only in Mexico, where I think we've done significant investments, but across North America. So moving beyond information to how to help people take action in their own best interests.
I love that topic, behavioral economics. I think it's, we'll dig into that a little bit later. Okay, Regina?
Here I'll go. And sort of following what you were just saying, we've seen that financial education is not enough for people to take that step. And going into behavioral, I do think that the place where we're at, especially in Mexico, is we need to understand that the relationship we have with money is different for everyone, and that relationship with money tends to set up the decisions that we're going to be making alongside. So when we come to a financial institution, whether it be for a credit or a loan for our businesses, or because we want to begin our financial life, it's not only about getting that information to make decisions, but it's also to understand why we want that money, where we're going to use it for, what we're going to use it for, and where we want to take that. And I think that one of the biggest challenges is that understanding that relationship that we have with money and talking about it, because one of the biggest issues is we have not been able to talk about money because we've been told that, you know, it looks bad if you do that. And also that it's something in particular with women, whereas one of the topics that I've been researching most, that it was a topic that we were not supposed to be talking about, and that it was not for us to do it. And so I do think that in Mexico, one of the biggest challenges is talking about it, and the other one is tackling cash. And I know that we're going to further talk about that later on, but as soon as we bring people in, as soon as we give them the products that they do need and that these products solve their needs, not something in particular that we haven't talked about, but we need to know what people need to be able to give them a product that serves their needs. And I think that that's where we need to, it's not about, as you said, financial education is about products that do fit those needs.
Great, thank you, Regina. Tackling cash, such a great topic. Last, please, Pedro.
Well, first, on the overview, why financial inclusion is important? It's important because it's a basic need. It's as basic as to have water, as to have electricity, to have access to proper products and services that can enhance your life, no? Through costs and through quality. Investments, for example, in terms of investments, it's and all the financial tools are transformative for people. They transform their lives around those tools. So that is why it's important to bring them on to the real economy, to everybody, at the same cost, at the same product. It's not, the challenges is about education, of course. It's about access, an easy access for them, but also it's about quality on the products and services at the cost that it needs to have.
Okay, now let's dig a little bit more on everyone's responses. First, Mike, you have mentioned a few times the North American dream and changing the financial system so it can work for everyone. Can you develop a little bit more on that with a broad view on the region? Like, financial systems are different, regulations are different, but we have different trends that government, central bank digital currencies, now with artificial intelligence. And does this technology still helping to create a better region with financial inclusion? Or what's your view on this North American dream?
Yeah, no. So I think very generally you talked about central bank digital currencies and that stuff. I think fintech in general, financial technology, has an incredible power to improve both inclusion in terms of people, the underbanked, the unbanked, getting onto the system. It has much lower onboarding costs than, say, a traditional bank. You get more people into the financial system. On the investing side, you can carry lower balances and all those types of things. At the Milken Institute, we do have a fintech program, and for us, it is how does financial technology improve access to capital, financial inclusion, and regulatory transparency and accountability. That third part is key because the regulation, we got to get the balance right. On the one hand, you want to get as many people into the system as possible, and you want to get access to, give access to as many SMEs to access to capital. On the other hand, you want to have the proper investor protections involved. And if you don't get that balance right, if it's too much of a Wild West, then you have scandals and people walk away from it and say, look, why did I even participate? And then you're back into the cash-based economy, not even participating. On the other hand, if you have too much regulation, then you end up choking off innovation and that sort of stuff. And to your point, there's sort of differences in the countries that we have here. In the US, about 10 years ago, the pendulum had swung to the point where thinking about concerns about investor protection were so far in the wrong direction that we had a huge problem with capital formation in the United States. In the 1990s, we had over 8,000 public companies. We have an index called the Wilshire 5000, which tracks the top 5,000 public companies in the US. Right now, we only have 4,300 public companies. We don't even have 5,000 companies to be in the Wilshire 5000. About 10, 11 years ago, Congress got involved and said, look, it had gone so far in the other direction that we need to do things to improve access to capital, and we passed something called the Jobs Act. I'm happy to go into details on that. What was nice about that was that back then it was down to about 4,000 companies. Now we're back up to 4,300. And we also have a very vibrant venture capital system and private equity system there. So in each of the countries, I think the pendulum is sort of, you need to sort of calibrate your regulations as to where you are on that pendulum.
Change is happening fast. How do you look the financial interaction between small and medium businesses and individuals in 10 years?
I think it's going to continue to grow. You think about 10 years ago, nobody even heard the term crowdfunding. Like, what does that mean, right? It's local businesses raising small amounts of equity capital from local people who know the businesses very well, and through enabling technologies like the internet and your phone, you can easily do very small micropayments and do very small amounts, and it's allowing for that system to actually flourish. And we're starting to see it actually taking off, not just in North America, but in emerging markets. It's where it's really taking off. So I see that trend continuing as people become more fluent in using their phones and actually being part of the financial system. Then that will be an enabling technology for them to do other sorts of things. So I think it's starting slow, but it's going to be exponential growth. 10 years from now, the average person, investing in their community is going to be like, it's just like doing anything, checking your Twitter feed, right? It's going to be just as common as that.
I love that vision. And a last question. What do you think is the role of the regulator in between these three countries, like in their relationship?
Yeah, again, I think it's getting that balance right. On the one hand, right, I think, in fact, I know all three regulators have an investor protection mandate. You need to start with that. You need to make sure you get as much fraud out of the system, get as many of the bad actors out of the system. We haven't even gotten into crypto yet. So, like you think, Sam Bankman-Fried's trial is going on right now. Huge bad actors, done a lot in terms of doing people being very skeptical of the crypto, but there's some good actors in that too. And so the regulators need to make sure that, first and foremost, keep the bad actors out. At the same time, allow for innovation to flourish. Allow for innovation in the regulations. And, yesterday we had Rob Wildeboer, one of the co-chairs of NCF, talked about what Canada did in regulation of financial services. Canada does not have a federal financial securities regulator. It's all at the provincial level. And so among all the different provinces, Ontario is the one that matters the most. They don't have a big budget. So what have they done? They just say, look, we'll just follow what the US does and just sort of piggyback off of that. And what's great about that is that it's very much integrated. They say, look, whatever the filings that people have to do at the SEC, we're just going to you can just file them here in Canada and we'll accept those. It allows them to lower their regulatory costs. It allows for the regulatory agencies. The SEC has a budget of like $2 billion, right? They have a much smaller budget. It allows their regulated entities and public companies to not incur an additional regulatory burdens on it. And it also gives another set of eyes. Their compliance people, their enforcement people regularly give tips to the SEC in terms of potential bad actors that they're seeing on compliance. And I think there's a real opportunity for Mexico to just follow that model. And so, free ride off of the United States on what we're doing. It's very much integrated. And what you're going to see is you're going to have regulated entities and public companies more willing to go across the borders because it's very, very simple. Do something like that rather than not overthink it like Europe and have this huge bureaucracy where we all get together and do all this stuff. I think there's a real opportunity there.
Susan, you mentioned behavioral economics and how you can have the tools, you can have the education, but if you don't create the right dynamic, people will not follow through. Especially Mexico, it's lagging big on insurance issues. Can you elaborate a little bit more on key examples on how you can drive people's decisions without eliminating liberty? Freedom.
Maybe I'll give you an example of one effort that we're supporting in Mexico in partnership with Common Sense Lab, which is a behavioral economics organization based at Duke University. We have been working with Common Sense Lab to restructure and redefine financial products based on both what customers need, but also ways for them to more easily make decisions about what they need and what would benefit their financial health. And so it's an example of one effort that we're supporting. You're absolutely right that Mexico has a very low penetration rate of insurance protection. And so I think it's important when we're talking about financial inclusion to not just talk about what we do in supporting nonprofit partners and outside organizations' efforts. We have a lot of collaborative efforts with government agencies as well, but starting with our own business. MetLife's business in Mexico is a pretty unique franchise. We acquired the state-owned insurer when Mexico made privatization commitments under NAFTA, and we have built on and grown that business since the acquisition. But the business was originally created to serve government employees, and that's still our broadest customer base. And many of these are nurses, doctors, teachers, police officers, many of them middle and low income. These are not high net worth, individuals, and that's the bread and butter of our business here. And so we put a lot of thought and intention into how we design products that meet the needs of our customers. And one example, just building on Regina's comments about how we think about money and our financial health is very much connected to the stories that we're told. So recently, we've taken one of our core products, which is a basic life insurance coverage that has 20 different options for riders that meet different needs in someone's financial life. And so it's a very flexible product that you can change throughout your life based on your needs. But we've done a very specific gender focus, and we've launched a program which translates as "I Want You Safe," which is not just the core products that are specifically attractive to women, but information, workshops, dialogues, conversation to really engage our female customers or non-customers on how to make the best decisions, informed also by the research that we've been supporting in behavioral economics. So it's just, I think getting more people into the formal system, as Pedro was talking about, is an effort that takes all parts of society. It takes the private sector, the public sector, the nonprofit sector, and it takes innovation and creative thinking about how to bring insights from all of these areas to make people's lives easier.
How do you think the insurance industry is moving in the next years?
Well, that's a big question. The industry looks very different market to market. I mean, within North America, and this is true globally for insurance, insurance is very specific to the social welfare programs of an individual country. So, MetLife operates in more than 40 countries globally, and our business looks different in every country. We can't export the products that we're providing to our customers in the US to our customers in Japan, for example, because the US and Japan have different retirement savings plans, they have different healthcare systems, they have different social welfare programs. And so, one thing that I think the pandemic certainly showed worldwide, it brought a greater awareness of the need to have some protection. It's one thing to have savings or to have credit, but there's certain things that you can't save against that you need to insure for protection. And so the pandemic has definitely raised awareness of the need for insurance, and we're seeing that play out in our, in our businesses, and it also made our customers, our current customers, I think, a lot more appreciative of the benefits that they have through the protection that we provide. You don't ever think about your insurance until something happens and you need it, and that's the moment when we need to make sure that we're showing up. And the pandemic, unfortunately, provided a great opportunity for us to demonstrate that value, and I think we did a very good job of doing that, and that's made people recognize the need for continuing to ensure they're protected.
Thank you, Susan. Regina, you mentioned earlier the importance of tackling cash. Of course, if in our journey to make financial inclusion and the future that looks like digital money will rule the dynamic, we have to tackle cash. Different countries have made different strategies on how to address this. How do you think it can be solved in the North American region?
I think that there's something very interesting in small businesses, and being able to offer small businesses a way to trust the financial system, to make it easier for them to have customers come in and pay and make money. And make business growth. And when we're talking about financial inclusion, we're talking about financial security. At the end, at the heart of it is feeling secure that you can do something without thinking it twice. You were just talking about insurance. You should not be ever thinking about insurance until you need it, no? So I think that tackling cash can be done with this idea that we're trying to facilitate transactions, and that transaction should be something that you can do easily. And so it comes back to that regulation balance that Mike was just talking about. And I think that there's a really fine line into that where might not have done the best job in the past, and thus have broken that line of trust. And I think that getting trust back is hard. So if you tackle it through small businesses, if you have small businesses say, look, I offer all these options for payment, I do it over your cell phone because it's something that we all carry, it's fast, it's easy, and you have that balance where fraud comes down, or if something happens, the solution to fix that fraud is easily accessible. then you'll have a less vicious circle and something more virtuous that will lead then to thinking about everything that Mike was saying, which is investing at the end and development and growth and making it this sustainable path in a way. And if you think about it, it's all about making lives easier. And so it is, I think that innovation and technology and fintechs are doing a great job. We have to convince people a little further that they don't need to. I was having a conversation yesterday at one of the dinners where someone was saying, well, I still don't feel okay leaving my house without a $200 pesos bill and my cell phone. So why do you need that? And someone on the other side of the table said, really? I never carry cash. It's a matter of how secure you feel that you'll be able to do and go around your day without needing to use that bill at some point. And so breaking that will be when we do have trust that we'll be able to pay for everything you need alongside your day with your cell phone.
In the past years, Banco de Mexico tried to implement a tool named CODI, which follows the payment system through QR codes, which follows a little bit of what India or China were still making in this decade. But it doesn't quite grasp the traction that everyone was talking about. What do you think of this implementation, specifically in this tool?
Look, I think that it's either a QR code, it'll be whatever tool that you need several things going on at the same time. And with innovation and with this idea, the thing is you're gonna have to go out and put something on the table and see how it works, and then go back and say it's not working out. And I think CODI was a first great example of Banco de Mexico thinking we need to do something. It did not explode as everyone thought it would. I do think that there was a problem in how banks were using it or making it easier for the user, the end user. How when you turned on your, I don't know if anyone has used CODI before, but you have to turn on your phone and go into your bank and your mobile app in your bank, and then go again and go into CODI and then go. There were so many clicks. It's like they need to talk to someone who does e-commerce so that you only need 2 clicks to be able to pay for something. You can't do 7 or 8 or 10. And so we need to go further and make it easier for everyone to just be able to just do a few clicks and be able to make it. And I think that CODI was a first exercise, and now there's a new one coming out, and I know that it'll be proof and error, and we'll figure it out, but it's a matter of making it into a few clicks. And we've been doing it. I mean, Pedro can talk about this. You can invest in whatever company you want in 3 clicks. We should be able to pay for our tacos in the corner with 3 clicks. And so we need to get there.
Can the public please raise your hand if you ever used CODI? That's a lot.
Yeah.
Mike, do you have comments?
So earlier I said, in terms of securities regulation, look to the U.S. In terms of payment system, do not look to the U.S. We are probably the worst in the world. I mean, 7 years ago, I went to Kenya, and they have this thing called M-Pesa, where you could go to fruit stands on the side of the road and pay for stuff, through your phone, right? So as you sort of figure it out, right, do not look to the United States for a faster payment system. The Federal Reserve just implemented something called the FedNow system. It's like 10, 15-year-old technology. Nobody's using it. It's terrible. There's the potential for, Moris, you mentioned CBDCs. That's years away in the United States. We're going to be very slow in that. I just saw a presentation from the PEAK system in Brazil. That the central bank implemented there as an enabling system that people can build apps on top of that. And that seems like a potentially useful one to look at. But do not look to the United States for payments.
Great. Thank you, Mike. Pedro, we've been talking about a lot of financial inclusion, right? And how to create simple tools so people can start getting access to financial products. But I've been thinking about this quite a lot.
And I have a question. Is there a systematic change that should be done first in order to get all this 50% small, medium businesses into the financial system? Is there a regulatory change? Is there something that has to be tackled first on the public side so we can get the real financial inclusion that has been achieved in the past decade in other countries?
Well, of course, financial inclusion is a whole ecosystem. You need the whole ecosystem working to bring financial inclusion. In the individuals, first, what happened that has been bringing financial inclusion to individuals? At a banking level with the credit, at a investment, in investments, and other products and services in the financial services and products. 4 years ago, only 4 years ago, it was not possible to open a digital account full onboarding process. You needed to have a hybrid process. So that obviously stopped very much the traction that one person can open an investment account in 5 minutes. In GBM, just 5 years ago, we used to have 20,000 individuals as an investors. Today, we have more than 5 million. And that happened because it was allowed by law to open a digital account, then investing a lot in the processes and technology to implement it and to lower the time for opening an account from, we used to open an account in 1 month, right now we are opening accounts in 3 minutes. And that helps a lot. But it's not only about the access. It's about what kinds of products and services and experience you bring to the investors. For us, it not only brought new investors, but also the actual investors, the old investors that we used to have for so long, they also found a very, very incredible experience on how they manage their investments. So investing in financial inclusion, it's not only about bringing new investors, it's also bringing better experiences and services, products, and costs to any kind of person. That happened in the individual side. In the SMEs, small and medium-sized companies, or already any corporation that wants to open an investment account, it's still an hybrid process. So you are not seeing a lot of traction on them. And what is the problem? It's the whole ecosystem. But where is the opportunity is that among people and corporations, there are about $250 billion invested at a 0 and 1 and 2%, when the rates today are 11.25%. But you incorporate there the corporations. You think that corporations are taking better decisions. They are not taking better decisions because they haven't have the correct access and products and services immediately to manage their own treasuries. So there's a way to keep on growing in innovation, work hand by hand with the regulators, because to foster this environment, you need to do it with the whole ecosystem.
But unfortunately, low financial inclusion drives unresponsible financial products at different levels and different type of products. How should we address this as a region?
Yeah, no, it's an excellent question, because once it's not about the access. Again, it's not only about the access. It's about how can you make them take the best decisions possible. Markets and investments, for example, are a very noble thing to do in the long term. Every person that has invested in the S&P for 20 years period, they have won money. So it's a very noble thing to do. But I mean, you need to work with advisory. You need to work with education. You need to work for them to take better decisions. If you just give them access without education, of course, and they keep on trading every day, that's a game that for sure in the long term they will be losing money. And that is not what you want. At the end, the other one is how can you bring them the correct access with the products and services and advisory to help them make the correct decisions to win money above inflation. So you are correct. It's not only about the access, it's a whole lot of things bringing them with advisory, education, products and services with low cost fees for them to invest. And make them think simple concepts. Invest in the long term. It's about discipline. It's about compounding. It's not about trading. It's not about being rich from one day to the other one. It comes with responsibility also if you are bringing access to them.
Could I add to that? Just
Yes,
a
please,
quick
Susan.
comment. I think it's also really important for regulators to be looking out for bad actors, because you're exactly right. You know, there is certainly widespread exploitation of vulnerable people. So people who are vulnerable financially are often exploited by irresponsible actors. And I think it's really important that we not only focus on expanding access and inclusion, but also on addressing those exploitative behaviors and doing that, you know, in obviously that's a regulatory responsibility. The private sector can't do that on our own. But if we see these exploitative practices, then we should call them out.
Thank you, Susan. Mike?
Yeah, so just a couple things. I mean, you bring up a great point. The fact that the more people that are outside the system, the bad actors are going to act outside the system. You know, in the United States right now, policymakers are struggling with what to do with crypto digital assets. And there are some who say, you know what, this isn't worth it. Let's just keep it outside the regulated system. That's not going to keep people from investing. And what we're seeing is that, you know, U.S. investors are less protected by people operating outside the system, right? And, you know, to pick up on, you know, what Pedro and Susan were talking about is that, you know, operating inside the regulatory system, you get the protections of the regulators from that, but you also get I think Pedro used the word responsibility of the firms, right? So if you think about fintech 10 years ago, it was all about the disruptors. We're going to operate outside the system and do all this stuff. Well, what have we seen over time? We've seen them actually partnering with established financial institutions, or give a shout out to Pedro, GBM just developing their own. I mean, to go from 20,000 customers to 5 million, I mean, they're leaning forward on this fintech revolution. And why are people going to GBM and why are people going to MetLife online? Because they trust these institutions. They have a long history of working in the regulated environment as responsible actors in this. So it's not just the regulators, but it is also the private sector who have an important part of this. And I will also mention at the SEC, a lot of the fraud that we saw was affinity fraud. We have a lot of first-generation Americans moving from Latin America, moving from Asia, moving from other places, and it was people within those communities who were targeting people who were outside the financial system involved in Ponzi schemes, and Ponzi schemes can spread very quickly over the phone and stuff. And so it's the responsibility from the regulators to bring them inside the system, and to Susan's point, to call it out and find it when we see those instances.
Thank you, Mike. That's an issue that drives me crazy every day. I'm every day on social media, and I receive every day different type of Ponzi schemes, questions. Many of them involve crypto. You're living outside the regulatory system, and it's quite difficult, you know, because you have to tackle both ways: regulatory term, but also education on people. Like, what's a good yield? What's a bad yield? What's in the market? What's out the market? It's a great topic, and I think I'm gonna put a little comment here. But the new technology that it's coming, artificial intelligence, you can copy faces of people, you can copy voices of people. My page has been copied 1,000 times, and people have been making fraud on that. So technology and the way content is going to be created in the future, that is going to be an issue that should be addressed as soon as possible, because technology is moving fast, and unfortunately, education is not growing that fast. So I think those are my 2 cents. Okay. Entrepreneurship, growth. What are your comments on how entrepreneurs and let's not talk about small and medium businesses, but people starting their own business and venture capital and all these markets, how can they get financially included, and how can we get the right instruments for them? Let's change a little bit the dynamic first, Pedro.
So, financial inclusion, it's a great business. It's a great opportunity. If you see it in both ways, you are creating, you are transforming lives around the tools that you are giving, and at the same time, it's a great opportunity as a business that you need to pursue. It comes with a lot of challenges. It comes with a lot of initial investment, and then keep on growing and scaling the business, and a lot of competition at the same time. You face regulations, giving sometimes hard work for you to keep on innovating, but it's a great way to see it. If you see the world in the next 10 and 20 years, it will be abundance in financial inclusion for sure. So who will win in the game of financial inclusion? It will win the people who moves more agile, who creates better barriers of security, of managing money, working with the regulators hand by hand, even if it takes more time to keep on innovating and investing, but it's worth it to work with them. For the regulators, at the same time, how to foster them on this, they need to be obviously very, very clear that their own job is to protect the people. But at the same time, they need to keep on the pace on innovation the same way as companies are doing it. You need to go wherever country it is doing well, and then with that, everybody in the whole ecosystem bring on the entrepreneurs and bringing on more products and services, competitive products and services that can help all the population bringing to the real economy.
Thank you, Pedro. Regina, how can we get entrepreneurs to more capital?
I wish I knew, because then I would not be
'Cause I
sitting
want some.
here. No, I'm going to tell you a story that might show a little bit what could be done in the region that could help entrepreneurs. There's, I don't know if you've heard of it, but Latitude is a fellowship of entrepreneurs who go in to learn about how to access capital, how to make pitches, how to sort of start their own businesses. And one of the main complaints that Latitude Fellows have is, how can I make transactions with my potential clients, potential investors, or angel investors throughout the region? Why is it so hard for me to be able to make a transaction in between Mexico, the US, and Canada? That can, I have to call my bank, I have to do this Cayman sandwich thing to be able to get money into my startup. It's so complicated to set up a financial process that can be trusted by investors around the region, and then to be able to make these transactions and actually get the money from your investors into your startup. So I do think that we have an opportunity, or that financial institutions have an opportunity of business there, of hearing what these entrepreneurs are suffering and the pain that they're having to deal with, because in Mexico, they can't have their angel investors do a transaction and have the money sent fast, or that they have to have it somewhere else. So if we want to make this grow as a region, we need to think about these cross-border issues. How are we going to make it easier for VCs in the one side and entrepreneurs who are starting with their startups, innovating and changing everything and making lives easier for people in general? How are we going to make it sustainable so that they can afford to be able to do transactions legally with regulatory systems, and stop losing a lot of time into trying to figure something else that should be sort of figured out for them, and focusing on innovating and fixing the problem that they want to fix. And I do think that this is something that could be an opportunity as a region if we tackle it together.
Susan, please.
I can just take the question from a local perspective to complement, I think what Regina's identified as a serious, regional challenge. MetLife's foundation in Mexico has supported an organization called Soliv, which identified some higher performing micro enterprises that needed specific support to be able to grow. Micro enterprises in transition is what they were referred to. And Soliv designed workshops, tools, programs that enabled them to assist around 200 of these micro enterprises to grow their business, expand their sales. And so there are sort of specialized efforts that, we're involved with and that we can support that do help, get these startups, beyond that initial phase. And so that's just one local example to add.
Great, thank you.
So the United States, we don't have a problem with access to capital for entrepreneurs if you're a white man who lives in Silicon Valley, Boston, New York, or Austin, Texas. The rest of the country, we have a problem that looks very similar to the issues that Regina identified in Mexico and that we also see in Canada, right? I remember about 8 years ago when I was an SEC commissioner, I attended something called the Congressional Black Caucus Conference. So the Congressional Black Caucus is made up of members of Congress who look at issues that are really importantly facing Black Americans. And so I was on a panel there, and it was how do we make access to capital colorblind in the United States? And I thought about it for a long time, and I said, well, we need to make the investor base colorblind. And I looked at some of the SEC regulatory policies we had, and a well-intentioned policy in the United States is something called the unaccredited investor definition, which says that for most investors, you are protected by U.S. federal securities laws for publicly traded securities, and there are some private offerings that are out there, and they're a little bit too risky for everybody, so only the most sophisticated people will be allowed to invest in those, and we're, quote unquote, going to protect you from investing in those regular securities because you're not sophisticated. Well, how did the regulatory agency, the SEC, define sophistication? If you're rich, if you have a certain high net worth or a certain income. What did that do? It excluded a number of minorities and a number of women. It's actually a discriminatory policy that discriminates against people to invest in private companies in their own communities. So the first thing we need to do is get rid of those sort of regulatory restrictions that we have. And you say, all right, well, that's just the everyday American. What about the professional investors, the asset managers that are out there? The asset managers have had a terrible history of diversity, equity, inclusion in the asset management industry. At our global conference a few years ago, Melody Hobson from Ariel Investments, one of the largest investment advisors in the world, African-American woman, called out the entire industry and said, look, you guys have been talking a great talk for 10 years on DEI efforts. If I were to hold you accountable for what you said you would do, what you actually did, she basically said, you'd all be fired. So we at the Milken Institute took that as a challenge, and we said, all right, how can we improve DEI efforts in the asset management industry? And we started a DEI and Asset Management Council. Carlisle, Apollo, Vista Equity, Texas Teachers, a number of folks, and trying to look at how can we make the investment community more diverse to then look at more diverse entrepreneurs that we have in there. And one of the issues they identified right away was pipeline development. We want to be doing a better job, but we can't find the right students. How do we do that? Again, we took that as a challenge. We went out to the Kauffman Foundation and we started something called our HBCU Fellows Program, where we just had our first cohort of 16 top-performing students from 10 geographically diverse, historically black college universities. We put them through a program where they got online programming to supplement the finance courses they're getting. We had networking programs with them to understand here are the different pathways to careers in asset management. We found internships for them. What we found was that the asset management community was begging us for these interns that they have there. They want to do the right thing, so we just need to find the right mechanisms now to put these people in positions in asset management where they now, there's the fiduciary duty for folks that they have, but then they can go through and they can look at and try to find more diverse entrepreneurs, whether it's women, minorities, or geographically diverse entrepreneurs in North America, whether it's US, Mexico, or Canada.
Great, Mike, thank you. We have 3 more minutes, and we have here 2 great questions. I'm gonna just ask it, and if you wanna answer it, raise your hand. First, Mexican financial institutions has technology and robust infrastructure. The problem is informals don't want to pay taxes, so having an account is a risk for them. What do you think?
Nobody wants to pay taxes. I mean, raise their hand if you want to pay taxes. But you know what I mean? Like, we have to do it, and it's not. I'm sorry, I sort of barged in, but it's not a matter of if we want to, and it's not the problem of the financial private institutions to make people pay taxes, but we have to turn it around. We have to make people do see that having a bank account, that being formal will be great. It's a greater good than paying taxes, or it balances the paying taxes situation out. And this, I do believe that comes with cheaper products for people at the end, or affordable products. That word is better, and some trust that because you do have a bank account, Hacienda's not going to come knock on your door and make you pay taxes in 2 seconds. It's something that should come along with the growth of your business and with incentives that it's going to make your business better. I don't know if that made any sense, but it made sense in my head.
Oh, it's great. And also like tackling misinformation on the issue, because that's just an important part. Okay, and last question. When CODI was launched, it aimed at being Brazil's PIX. However, for the PIX to be successful, other policies were implemented way before. That's what I was talking about, systematic change. For example, fintechs were already including millions of Brazilians. For the new DEMO, or the CODI 2.0, what do you anticipate it will happen? Are you expecting for it to be widely accepted now? If not, what's the main challenge? Dun, dun, dun. Pedrito?
Well, I think Regina already talked a little bit about it, but you need to make it easy. You need to make it easy. You need to make it in your day-by-day. I think the best example on it is not only Brazil, but it's also China. In China, the way you pay and all the digital payments is so incredibly easy and democratized by everybody. You can pay at any informal market. You can pay with digitally. So it's to make it easy. It's to make it to enforce it to everybody to accept it, and all the fintechs and all the platforms and all the devices must have an easy way to use it.
There's also, just to end the comment, the India case is also a very interesting case. They just give a social security number to everyone because there was people in very diverse regions. Once they have the number, and you can give them the account. Once they have the account, you can get the data. When you have the data, you can give them the products. That's also a very interesting case. The India-China case are great. Thank you very much. And everyone here, thank you for coming. This was Financial Inclusion.